Hello, everybody, and I'm hoping you're having a great and wonderful day in the great state of Idaho and it's staying warm. Hey, I got quite a few items for you today. All are spectacular and all are going to help you out. So let's get busy on it. So first of all, let's talk about soft credit pulls. Soft credit pulls are not unique to the industry, but we find out that a lot of lenders are not doing the soft credit pulls. So you can do a hard credit pull, which means it affects the borrower's FICO score. They get triggering leads, which are people that are randomly calling them. We sometimes like to do soft credit pulls. So what happens is we pull a soft credit report. It's a full credit report. It gives us all the credit scores and FICO scores, but what it doesn't hit their credit score, so they don't ding their credit score and they don't get those annoying calls of everybody calling them in and asking them for all their information. The reason why a lot of lenders don't do this is because we can't charge the borrowers for a soft credit pull, which means that there's some expense that can't be recouped on this one here. But the nice thing about it is it really overcomes an obstacle. We get a lot of clients say, well, I'm thinking about getting qualified, but I really don't want my credit pulled right now. I see on my credit statement or on Vantage Credit or Credit Karma that I have this credit score. In this circumstance, we can pull the credit report. It doesn't harm their credit, and it gets people into the pipeline. It gets them qualified and making sure that we can actually qualify them. So pretty good process. Hey, if you haven't already heard, loan limits went up this week. Yes, everybody came out with their loan limits, and they were actually pretty nice for the state of Idaho. So you can see conventional went up to $726,200. So if you currently have a borrower that's maybe building a house and they had a $700,000 loan, and the lender wanted to put them into a jumbo loan, have the lender reevaluate and maybe put back into a conventional loan. Lenders love to do jumbo loans because they make a lot more money on them, but conventional is really, really the way to go. FHA also increased, obviously, $586,000. That's for Ada and Canyon County, what's called the Boise metro area. Outside of that, it's $472,000 in change. Unless you're in Teton County, then it's $1.089 million. Yes, you can buy $1 million home in Teton County for 3% down or 3.5% down. And then technically, VA has no loan limits. Speaking of the VA had a circular that came out on Wednesday, and it kind of fixed not a huge problem we have, but just an obstacle we had over the last many, many years. And this really affects like Valley County, Boise County, even some gem counties. And what it was is it was on road maintenance agreements. Before, we had to have a road maintenance agreement. Everybody had to sign on it. It had to be recorded. It was just kind of a real pain in the butt. So now what the VA said is if there's an existing road maintenance agreement and everybody on the road is in agreement, even though it might be just a handshake agreement, they're not going to ask for a road maintenance agreement. Now, I'm sure they're going to ask for a letter of explanation from the borrower saying, yeah, we understand that there's a road maintenance agreement. But this is actually a pretty nice little obstacle that gets overcome. I've had a couple times that this has happened up in north, like in Kootenai County or Boundary County, where nobody knows where the road maintenance agreement was. It was never recorded. It was just a handshake. We do have to have the easement recorded or the right-of-way recorded. So that didn't change, but that's more logical than anything. Idaho Housing this week released their bond program again. Now, if any of you have been in the industry more than probably 5, maybe 6 years, Idaho Housing used to have this bond program. It's a pretty spectacular program because the interest rates are significantly lower than prime rates. So what happens is Idaho Housing sells a bond. In this case, it's a Ginnie Mae bond. You as in your 401k or IRA or financial planner can actually buy into these Idaho Housing tax revenue bonds. But what happens is Idaho Housing gets these bonds cheap, and then they drop the interest rate. So as an example, this is a Ginnie Mae bond. So this is only FHA, rural development, and VA. Current rate as of yesterday was 6.75 on their typical FHA loan, but on the revenue bond or this particular bond, it's down to 5.75%, so a whole point less. And this is spectacular. It was really, really nice to see this come back. Now, there's definitely some caveats with this one. First of all, you have got to be a first-time home buyer unless you are in a targeted county. So Ada County is not a targeted county. So if you want to buy a home using this bond, you cannot own a home in the last 3 years. But over the border in Canyon County, you can own a home on Tuesday, sell it on Wednesday, and be a first-time home buyer on Thursday. So pretty nice on that. The other thing is this can never, ever, 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 never be turned into a rental property. was most or some of Idaho Housing's loans. You can be a first-time home buyer, get into the Idaho Housing loan, stay in the house for 365 days, and then on the 366th day, you can turn it into a rental property. This cannot ever be turned into a rental property. If Idaho Housing catches somebody that turns it into a rental property, they can actually call the loan due in full. Not a really great thing. The other nice thing about it is Idaho Housing's down payment assistance is all totally available for this. So the grants, the down payment assistance, the closing cost assistance, the secondary mortgages. So you can get into a low interest rate loan, 96.5% first, do a 3.5% second loan on FHA, and get into for 100% financing. Now, of course, rural development and FHA are already 100% financing. Now, one little caveat again, Idaho Housing is requiring a 0.5% coming out of the borrower's pocket for closing costs. Basically, that's what we're doing. In that case, it's $500 for every $100,000 you borrow. Idaho Housing does want them to come in with a little bit of money, even though they can get 100% financing and have the sellers paid for all the closing costs. It is going to be an absolutely insane spring, and I think it's going to be crazy like 2020 was. Here's why. We anticipate rates going down into the fives. Some people are even saying the low fives. We know that the builders are not pulling permits. They're not building spec homes. They're pulling back quite a bit. We know that there's a lot of pent-up demand. We have a lot of clients that say, hey, I missed out on the twos. I thought about those sevens, but now if the rates come in fives, they're going to jump on those. So now is, and right now is actually a spectacular time to buy a house because sellers are giving away the farm. So come spring, we're going to have a pent-up demand. We're going to have low interest rates, not the twos. We're not going to see the twos again, I don't believe. And we're going to have a shortage because the builders are not putting houses in the ground right now. This is going to be a crazy, crazy spring. So if you have buyers right now, I would absolutely encourage them to giddy up. Get into the house right now while the sellers are giving away the farm. If you've got some sellers that are sitting on the fence post, you may want to wait until on spring and see what happens in this crazy market. Hey, thank you very much. I appreciate your business as always, and make it a great day.